Hello everybody, welcome back to the channel. Today we're doing my portfolio weekly review where I go over all my trades. This week was pretty crazy. I realized about 5K in profits, but I also closed a bunch of trades and realized 4,300 in losses. We had my ride lottery play from last week play out. That was an earnings play, so we'll see how that did. Let's just go ahead and jump right into it. Here's the daily close snapshots. Monday was pretty good, everything was green. Tuesday, flat day. I think Monday actually closed a bunch of stuff here. Wednesday was a red day, but I was able to close some riskier positions for gains, so I would consider this a good day in my portfolio, at least. Thursday was flat. Friday, we saw the devastation from Wish in my portfolio because I am heavily exposed to Wish. They had a bad earnings. We'll talk about that a little bit. Here's the weekly review sheet. If you look at the last week here, you can see I'm back under the 200K mark. The $200,000 resistance lives on. I lost about $4,400. Most of that's due to Wish. Like the Friday dropped about 6K. So negative 2.25%. Realized premium in August, about 2,000. One thing that I thought was really neat when I went to this sheet was that I've passed six figures for realized income from options. So that's pretty cool, actually. That's only over the course of, 17 months here. So, I don't know. I thought that was a cool achievement to breach. This week's trades. Monday, nice and easy. Took a little profit. Closed my Virgin Galactic put for $3 each. Why not lock it in? Which in hindsight was good because it looks like Virgin Galactic dropped down to $25. Back here, I think Virgin Galactic was above $30. So, definitely missed some realized or some paper losses by closing out early. Intel, I made a video about this is a safe play to put on. I decided to close it down now and just take my money and run. I think that's at 66% profit right there. Netflix, I put on this Netflix put last week. Netflix went up a bit, so I chose to lock in that gain. Netflix has been a moneymaker for me, but recently the premium just hasn't excited me, I guess would be a way to put that. I also closed my O put here. It reached about 50% or I think 40% profit, and it still had plenty of time left, so I said let's just take that and see if O dips. Maybe I'll reopen that position. Tuesday, Zoom shot up to 394, I think it was. So I decided to put on that Zoom bear call again. I went a little higher strike this time, so I didn't have to worry about it going up to like 403 again. I got $45 per contract, and then I also decided to close my bearish Costco Zebra. Costco just seems to keep going up. It doesn't seem to have a wall in sight. It just, my confidence in it going back down isn't there anymore. So I decided not to reposition the Zebra. So I'm just gonna take the loss, save the $940, and just move on to the next trade. So I did realize 1562 off that Costco bearish Zebra, which is unfortunate, but I mean, I'm still learning how to use that strategy the best. It is a directional play, so you're bound to be wrong sometimes. Wednesday, Zoom shot down to, what was it, like 460? I was able to close the spread for $5. I probably could have closed it for $0 if I would have been patient, which is kind of neat to think about. The spread, the bid in the ask was actually showing like positive 5, so I could have made more than my max gain if I was to get a fill, but I don't think the market maker is going to take that. So 1 day hold to make $200 off a quick play off Zoom. Had I done bear Zebras on Zoom though, would have made a lot more, about 4,500 per contract, because Zoom shot down to 460. The ride lottery play, ride shot down to like 580, maybe even 570 before the earnings. So I was showing some losses here. I think at one point it was up to like $850 of a loss. Thursday morning it shot up to 630, and I was able to close it for a small gain. I would have closed it even for a loss here. My play was my trading plan was to close it after earnings. So earnings happens, I was just gonna get out of it. I wasn't gonna try to hold it and see what would happen afterwards. Good thing I did, because I think ride went down to like 530 on Friday. So had I been holding it, would have been losing all that money. Probably down about 1,500 right now. So make a trading plan, stick to it. Made a little money off of it, but the key was I stuck to my plan. The real winner in this trade was actually my broker. I paid like $43 in commissions to get in, 34 to get out. So they made like $75 for this entire round trip. I don't think I'll have to pay that $10 monthly fee this week though, because I'm sure that takes care of it. AMD, I decided to close down that zebra, lock in that gain. So that was a nice little $2,000 win from that bearish zebra. I also closed down my Clorox bull zebra. I was hoping it would go up, which it did. Locked in $1,000 gain off that. And then Friday, things went south. Wish had a bad earnings. They basically said cost was more than we expected. We made less revenue. We're losing members, and we're not getting the growth that we were seeing because customers are going back to retail stores as those are opening up. They also said that they were going to direct their marketing money into retaining current customers instead of growing. So like all these different like news things that they're talking about where one thing would make it tank. Here's like 4 things going on at the same time that really gonna make Wish tank. So it shot down to, I think it hit 650 at one point. As you know, I have 2,000 shares of Wish, where maybe you don't know, but now you do. And my plan going into Friday was to sell some coverage strangles, sell some puts at like the $5 mark, and then sell some calls at about the $10 mark, collect that premium, and then if Wish stays between 5 and 10, I make a nice premium and lower my cost basis. If it goes above 10, then I make profit from the put side. So like that was the plan. When I was looking, the $5 puts wasn't selling much. I wasn't feeling selling the $6 puts to make the collar strangle. So instead, I left my shares alone. And because it's human nature to want to do something to like try to correct the trade, I decided instead to focus on my $15 puts then Wish that had been rolling for a while. And the extrinsic value of the position here got sucked out. So rolling out a month even, I would only get $5 credit if that. Like the spread, I might not even be able to like roll a month out for a credit because it was mostly intrinsic value. And since it's all intrinsic, there is that risk of getting assigned. So I decided to actually double up and roll down. I increased my percent chance of winning this trade from 5% to like 20%, which is still very low. But I'm still a long-term bull on Wish. And even if I have to keep rolling this position, I don't think I'll do another double down row at 20. Wish becomes about a 40K position in my portfolio, which is about 20%. That's pretty risky, so I would not suggest that. When here I am doing it, do as I say, not as I do, I guess. Rocket, these calls I bought these calls like 100 days ago. They're finally in the profit. I'm just sick of seeing them, so I decided to close those down, take a little gain. CCL has some puts that I was able to close for about $100. SoFi, in the morning, I was able to close this for a couple bucks each, just in case SoFi got back down. SoFi was actually testing the 15 mark again, so I just wanted to lock in my gain that I had instead of waiting for it to expire. So that's why I closed that for a small gain. Pay a little bit back just to secure that win. I would have felt pretty stupid if SoFi went and this went in the money, and I had a chance to close it out for very minimal. I also decided to sell some calls against my CCL leaps, so collected about $40 per contract. I decided to take advantage of the Virgin Galactic dip, so I sold some 20 puts September 17. Like I'll take ownership of those shares if that happens, so that's basically a free $180 because I will take ownership if that gets that low. I also had some Palantir puts expire that was $897 in my pocket as a result. Add that all up, and you get $727. I also had about a $2,200 gain in my IRA from closing some Rocket puts, so that was pretty cool. Here's another view that I decided to put on this time so you can get like more information about those plays. This is my spreadsheet that I track everything in. And I guess the columns to point out, you can see the date that I opened up these plays. You can see the expiration date. Actually, that bear call I think is wrong. 8-4. I opened that this week, so that's actually wrong. But everything else should be pretty on point here. Days held, you can see how long I held it before I closed it. Actually, that Zoom play is from last week, so you can just delete that one, my bad. there's the zoom play they put on. So ignore that first row. That's from last week. The rest of the stuff is for this week that I closed down. And yeah, so you can get more information. Here's that rocket call. I told you I had that for about 100 days. So very minimal gain for holding that. But I mean, a gain's still a gain, I guess, right? What else do we got here? Here's the current positions I'm in. Obviously, Wish tanked pretty hard, trading at 750 at the time of the snapshot here. My cost base is 987. I've still covered calls against the position. I'll probably have to take some time to actually look at all my plays on Wish and see what my adjusted cost basis is overall. And then here's that Palantir put that I said expired. I sold those a long time ago. If we go back here, I sold those, was that July 8th? So 36-day hold for $900 gain. I decided not to close this one because Palantir was at 25. I highly doubted it would go up. So why give up the $10 plus commissions? Next week I'll have to look at this Camel Soup put. This one I might just close for a loss, but I'm going to wait for all the extrinsic value to get out of it. And that's only because I already have another Camel Soup play in play. So if this is a small loss, I'll take that. Here's my Baba 205 put. We'll still let that run and see what happens. This call here for T is on the covered calls for the PMCCs. And then we also have the CCL call against the Leap down here. At the bottom here, we have a bull put spread on Clorox that's still in play. And then my Baba bullish zebra, in which we hope Baba goes up. Baba took a dip today, so now I'm in the red again. Here's the snapshot of my portfolio in the trader workstation. You can see like my daily was pretty bad, but my maintenance to net lick was at is less than 25%, maybe even 20%. So I've got plenty of room to work with for next week to try to find some more plays to make back the losses for this week. And I hope everyone else had a better week than me. Hopefully you weren't too exposed to the Chinese stocks this week. And, good luck trading next week, guys. Let me know how you did.